What's up, everybody? It's Omar. It is September 10th, 6:53 p.m. and I wanted to make a video talking about the three stocks that I posted on Twitter. Just to give you some quick technical analysis. If you don't know me or if you're new to this, I have a Twitter handle. You just type watchotrade. Oh God, I can't spell. Here we go. All right, so I have a Twitter and a YouTube channel as well. So here's my Twitter. Let's go to my YouTube as well. Yeah, and I used to post a ton. I haven't been posting as much. I took most of the summer off and just chilled. And I got a lot of work and stuff like that, so it's just hard for me. And honestly, you get tired of it. I mean, to me, it didn't grow as fast as I thought it would, and I just kind of got tired of making the videos, to be honest with you. But I got a ton of good content. So this is what I posted. Now, I had an opportunity to set up my desk today for a little while. That's why I was able to post. I used to do this a lot because I was sitting at my desk a lot, but now I'm doing a lot of moving and traveling, and it's just very difficult for me to to post. But this is what I posted. This started pre-market. So NLST, remember to map your support and resistance lines and use them as an anchor. Let the trade come to you or don't trade at all, right? So these were the support and resistance lines that I had mapped. Okay, now if you notice, let me pull up the chart now. Give me 1 second. Sorry, oops, wrong chart. Okay. So this is what you do, guys. This is what you do. So all I did, if you saw this, was I just post my support and resistance lines. And the support and resistance lines are anchors so that you can get a sense of where the stock is going to be. Now, this was the high at this point, 56 cents. And this was the low, 38 cents. So if you see, I mapped the line here. And then I mapped the line here because these are the pivot points. Then I mapped the line here, right, because it bounced here. And then I mapped the line down here because this is where it bounced off pre-market. And in theory, it's probably not a bad idea to map a line here, but I didn't do that. Now, where does this 59 cents come from? Because what I did was said, okay, if the stock has the potential to break out, where would be the next level above? So all you do is go to the yearly. And on the yearly, if you notice right here, 59, actually the low was 60. I put 59.9, but it should have been 60 is what I should have put there. And that's the next level above, on the yearly. So that is why I had mapped that overhead. So now let's look at the stock. So so what happens? Markets the stock spikes pre-market. Let me zoom in here. Gets to a high of 56, pulls back, finds support at 38. Market opens, right? So it starts gapping down, but look, it never gets back to that previous support level of 38 cents, 38.01. And if you notice right here, it breaks up, right? Moves up, right? Gets above VWAP, can't hold it, right? This would be a level of resistance right here because look, this technical little pivot line pulls back. Look where it finds support, right there. It doesn't pull back to this previous support level. It's holding, see? It's the previous. Moves up, pulls back again. But look what happens here. It forms a higher low. So that is telling you that the stock could potentially start moving, and then it just rips. It just freaking gaps up. And if you notice, it hits this, pulls back, still forms another higher low. So these are all bullish signs. And it gaps up all the way to that 60 cent mark, and which I had mapped. I had that mapped in the pre-market. You saw the screenshot. Then it just completely washed, because what happened was this: people were bought here. They were putting sell stops. So like I do that too. Like if I get in a trade, right, and I say, okay, I'll hold to see how it reacts to 38, and if it can't break 38, I'll stop out. Now I use mental stops. I don't use physical stops because I don't trust the market makers. But what I would do is I would already have a stop set like right around here. so that it automatically takes my profit. The reason being is because look what happens at 60, it pulls back. It pulls back all the way to 51 cent. You know, and you know, this could have just continued to wash, but there's so much volume that, you know, you gotta expect that it's gonna keep going up. And even on this pullback, right, it's still way above the breakout level. So, you know, you see that holds, and then the volume comes in, and then it pulls back, and then what? Look, breaks through resistance here, pulls back, but resistance support right here, which was the previous breakout level, pre-market high, all right, acts as support. And that's another indicator. Okay, I'm going in, and that's why this thing ripped, because the smart buyers saw that area hold and they go in, and this the volume. This is your, and short sellers are trying to, you know, they think, oh, it's not going to break through this, and sure enough, they get pushed out because the volume's coming in. Shorts got a cover, and it just continues to go up. So shorts were probably risking this level because they probably looked on the higher time frame, so they went on the daily 1 year, and they were like, okay, what's the next time frame? So they probably went right here at 64, and then they risked off 64, they got squeezed. And then they probably risked off 67, then they got squeezed. Then they risked off of 74 right here, and then they got squeezed. So this is what happens. Shorts are risking off these levels, but these short sellers are morons, because if you notice these candles, look at the daily candle here, for example. This was on September 20th. It's only 37,000 shares traded that day. This is already almost 50, 80, 90 million shares. I mean, it's going to just obliterate that. These things no longer really have any relevance, because there's so much volume that, you know, it's just going to eviscerate it. So that's why you see how it got to that 74, 75 level and then just pulled back hard. That's all it is. It's just people who have those stops and shorts are trying to short at those key levels, thinking that it's going to fade. But what happens is every time they take a short position, more volume comes in, and those shorts are getting squeezed. And now it's at 92 cents. I was telling people, you know, well, this one I didn't tell people. I just had the support and resistance levels. But I did post once the stock got about here, I was letting everybody know that it had a volume surge. And sure enough, it just kept ripping. So now if I was going to create like my support and resistance lines for tomorrow, this is what I do. I'll erase this just so you can, I'll clear it just to show you what I do. So what I do is I usually start from a 15-minute time frame. So I'll start off from a 15-minute time frame, and I'll map the levels. So here we go. I'm going to put here 92.7, and then I'm going to, here there's a support. So you see how it pivots right here? So this is a level of support, and then right here it kind of like bottomed out here. This is where it kind of started moving, and then it spiked up here. So, and then it kind of pulled back here. So this is where, and then right here as well, that pre-market high is always important. And then we see we got this level here, and then we got this level like right around here. You know, and then if you want to be exact, you can kind of look at the key and you can say, okay, 40 low is 38.9, this says 38.8. If you want to be specific, you can right click on it, put 38.9. Alright, there you go. So that's the 15-minute time. And then what I usually do is then I'll go back on a 5-minute time frame to see if there's any levels that I couldn't see on a 15-minute time frame that I would see on a 5. So right now I like the way this 15-minute is, because these are good pivot points with a lot of volume, so you get a real sense of where the direction has changed. Do I want to add anything? Right here, maybe I would add right here, like right at this sort of level right here if I wanted to. Yeah, I can add that, and then I can add here, right here, on this 5-minute, and then, you know, sometimes I'll look at a 2-minute, but I think these are the good levels, so you can see right there. So now tomorrow I'm already set. I already know. Now pre-market, if it keeps moving higher, higher, and higher, then I'm ready to, you know, map my additional lines. But I have pretty much key levels set to see how it's going to go. Now, what you want to do is go back on a bigger time frame to see like what's the next level above. So I'll go back, let's say, like 10 years and see on a 10-year time frame. I mean, this stock at one time was at $4. It's definitely not getting back to $4. I don't want to say that. I mean, you never know what a stock's going to do, but the odds are highly unlikely that it's going to get back to that. And right now it's in the 92 cent level. That's what sucks about Thinkorswim. Like, the candle doesn't really reflect like the after hours. It should see this candle should be like right around here right now, but it's only at 75, which is stupid. But if I'm looking at the next level above right here, I would be looking at that dollar mark. So the dollar mark is going to be a big make or break mark to see where the stock is going to wind up at. You know, if it can't hold it, it should pull back hard. But tomorrow, you can watch when the stock has the big sell-off. And one of these levels, it's probably going to bounce, and you can take a nice bounce. Doesn't mean it's going to go all the way back up. It just means that you're going to have an opportunity to dip by it and take a nice little position, and you know, get a nice scalp out of it. You know, so that's how I map. So NLST is mapped. Okay, sorry. And then, but let's talk about the stocks that I did call out for you guys. Shit, sorry. So. And you can see it's all time stamped. I'm doing this before it actually happens. So what did I say? Okay, let's start with Fred. I said, look at a quick dip. And the reason why my grammar's all fucked up is that I'm typing this fast. I'm at work. Like, I'm not even supposed to be looking at none of this shit, you know? So look at a quick dip by cover spike on Fred at 223 between 223 230 level area, right? So why did I say that? And how did I know that was going to happen? All right, so let's pull up the Fred chart. All right, Fred had this crazy rip, all right, pre-market, okay? And it had some good news, actually, as well. So apparently somebody's buying this out. Let's see, what did it say? Fred start rockets after $165 million deal to sell pharmacy files to Walgreens. So because of that, you know, that made me bullish on the stock. It doesn't mean it was gonna, you know, doesn't mean that it's gonna, you know, run. Like, I never really know, but the probability was there, I thought. So, oops, so all I did was, let me do Friday 5 minutes. All I did was, and you saw, I mapped my pre-market highs and lows. So here was the high pre-market, right? Here was the low. So, you know, I mapped this level, and then this thing bounced up. And I did this fairly quick. I mean, this should have been, yeah, oh yeah, I mapped this because of here. So start here, bounce here, bounce here. Technically, you could, in theory, map this too. I didn't map it, but in theory you could, because this is where a pivot. This was a pivot level. So in theory, you know, you could have mapped this area right here, which is the high of 242. I didn't. I had the 244. This to me made, you know, to me this was a bigger trend. And then I had mapped this level, and then this level. And in theory, you can map this level as well. I didn't map it, but you know, you could have. So I'm mapping these levels. So when the market opens, right, I see that it's pulling back, and I'm like, okay, the stock is up, it's pulling back, but it has so much volume that, and because of the news, I'm thinking that it's gonna move higher. And sure enough, that's what happened. I said, so look to dip by between the 220, 230, 223 level. I had those levels mapped, okay, based off this and this. So my idea was that if the stock pulled back, people were going to short it, risking off the high because it started to sell off, and that if it held this level or this level, they would cover, and then dip buyers would get in, and it would drive the price of the stock up. That's it, guys. That's it. You don't need 50 indicators. You don't need MACD. You don't need none of that bullshit. Okay, that's it. You map your support and resistance levels, and that's how I took the trade. And you know, you see, so there's so much volume. You know, I mean, this thing, right, is daily average is 469,000 shares. It traded 36 million shares. By this time, it already had traded, I think, over 1 million shares. So, you know, I mean, it's well above. So that's telling you that the stock is more than likely gonna go up. So when a stock pulls back, and it only pulls back like, you know, 40-50% of its initial rip, that's a bullish sign, guys. That means the stock is gonna go up. The stock, it would have to like break below this area in order for it to just fade. But because it pulled back and held, it ripped. And that was it. And then all this is short sellers getting squeezed. That's all this is. Especially here, the double top. They saw this, short sellers saw this. Don't short the first day when a stock is, you know, when a stock is trading, you know, 100 times its average value. I mean, it's stupid to short. If you're gonna take a short like this, you scalp. You get in. Like, let's say I would have scalped right here. Let's say I would have scalped right here. I would have said, what's the previous support level below? Me, I would have probably like right here. I would have covered. I would have covered like probably covered like right in here, right at. So if I would have short, let's say at 285, I'd have been looking to cover right here at 275. All right, right here, 275, 273, because this is an area of support, and the stock has so much volume. I'd be too scared that I'm gonna get squeezed, and that's what all these short sellers got. They got squeezed. So let me clear this out and let me map my support and resistance so that you can see how I do this, so that you can do it yourself. So again, I'm gonna start with the 15-minute time frame. Excuse me, guys. All right, so let's see where we're at. So here's the high. Right, this was the high here, pre-market, so that matters. Okay, here was the pullback right here. You could, in theory, map this as well. I'll map it just cause. And then this was right here, and right here. All right. Now I'll go back 5 minutes. And let's see where else I missed. So this right here is, I'm gonna map it because this is where it actually pivoted. All right, even though these are areas of support. Okay, so in theory, I would probably map here because I see this is an area of support. You see how it has these candles right here, and then it rips, and then this is absolutely an important area. Double top here, pulls back, kind of holds this level here. You know, this is what this is 266 and this is 267. Yes, I would map 266 just because it's a next level of 1 cent below it, and then here the 310. So this is what I'm mapping, and this is what I'm looking at tomorrow. Let's see what happens. Let's see if we get a continuation. Maybe we get a pullback, you know, back to this, probably either to this 277 level, or like this 277 level, or this 266, 260 level, and then we get a continuation. We'll see, or maybe it just fades, but we'll see. But now I have my level set, so I know potentially where to make a trade off of. All right, so those were the longs. Now let's talk about the short that I called, and I called this shit as it was happening. GEMP, look, it was at 228 when I said this, when I posted this. I said, GEMP, look for a short into 230 area now. I called it and posted it as fast as I can. Now, guys, nobody on Twitter does this. I don't give a fuck who it is. I see people post, like they'll say, you know, I'm taking a trade, and they post the number. Nobody does this though. Nobody posts a chart while they're taking it. Nobody does this while they're taking the trade, mapping it, really explaining it. Nobody does this. I'm the only one that does this. I haven't yet to see somebody else do this but me. I am the originator of this. I'm taking sole credit of this. So let me talk about GEMP. It was on my watch list. Why? Okay, because the stock has been on a tear, right? The stock was, let's pull up the chart. Okay, this stock, you know, was 83 cents, and it got to a high on August 10th. And, you know, it kind of faded. You know, it got up to a high of 192, but it's been holding this 140 area. And then we got this rip. But look what happened. I got a whole video about this exact pattern. So the stock gaps up. It's overextended now at this point, right? Closes weak. What I mean by closes weak is it gaps up really high, right? It has a nice move up, and then it just fades the rest of the day. And then it closes weak, and then it continues to fade. So that the next morning, guess what happens? People cover. And the reason why I was telling people to shorten this 230 area, because this is an area of consolidation. That's it. So 230, but look what happened. I didn't map this, but this would have been an area, because look at how the stock pivots that I should have mapped as support, as resistance. I'm sorry. Look what the stock hit. It hit that exact level, that 240 level. And this is just a quick cover spike, and then you got the continuation of the fade. That's it. That's all it is. You can make a living doing this trade. Now, this is the problem. This is what Stephen Ducks don't tell you. This is what that dickhead Modern Rock doesn't tell you, is that these stocks are hard to get the shares to short because they're hard to borrow. So for all you youngins watching these guys, worshiping them, you like, oh, I'm gonna follow them. You can't even trade these stocks because you can't find the shares. You could try with Centerpoint, you know, or one of Speed Trade or one of the other brokers, but you gotta pay for them. So you're already down before you even make the trade. So you gotta be sure. So they don't really talk about that kind of shit, you know, which is very misleading, you know. That's why I've been more posting longs, because a lot of you guys say, oh, more help me, you know, long, teach me how to long. So you can see I've been posting a lot of stocks where you can dip buy, you know, because, you know, not everybody can short, but you can always dip buy and make money, you know. And as much as, you know, as much as I give him shit, Tim Sykes is right. I mean, dip buying is the way to go. It's the move right now, you know, and you can make money dip buying. You don't have to worry about shorting. You know, I like shorting because to me that's the edge. You can make a lot more money, in my opinion. But, you know, that's what it is. So this is what you do, guys. When you see a stock that is overextended and closes weak, the next day you're gonna get, at some point, you're gonna get a pop, and it's gonna fail one or two of the resistance areas, and you just go short, risking off that area. That's it. That's how I knew to go short in this area. That's why I say in the 230 area, because I knew this was a huge area of consolidation and it was gonna fail one of these areas. That's it. All right. Doesn't mean that in tomorrow you probably might get another opportunity tomorrow, because it closed weak again. Tomorrow it might pop again to this 230, 240 area and fail and fade again. You know, we'll see. So I would continue to watch it. All right. And those are the stocks, and that's how I do it, guys. Tomorrow, if I was you, I'd be watching AMD. AMD is gonna hit. AMD is on his way to like $32. You know, it's just a monster. It just will not. Look at this chart, man. Look at this chart on AMD. This is crazy. AMD was a stock that for the life of it could never get past $15, and now it's at 29. And if we go further, let's see. Let's go. Okay, I don't think has it ever been this high. Let's see. So this stock has gotten as high as $42 back in 2006. Right now it's at $30. It's heading to this $32 level. If you look at the chart, it's heading there. This is what if I would long this, and that would be my price target. I don't, you know, tomorrow maybe it fades. You know, it usually has a big pullback, so maybe it has a big pullback. But I would be looking for a dip by an AMD. So I'll do this. I'll use this last stock, and then I'll end the video. So this is what I'll do. All right. If I was looking at AMD, I would map again. Go back 15-minute time frame. This is a 30-day, 15-minute chart, and you're gonna be looking for a dip buy. So, you know, so let's zoom in here. So here's a level, right? Here's a level. I'm just looking at yesterday, you know, today's chart first, starting off that. Oops. Okay. And here's another level. And then, you know, I'll look at this and I'll see some other levels. So this is a level I would look at because there's a pivot point right here. So I'll be looking at this level, and we're sort of like, I would look at this level. It's out of 4 million shares in this 15-minute time frame. Crazy. All right, let's see. Right here. Right here. So these levels on the 15-minute time frame to me matter, you know. Let's see, and I would map this, maybe this as well. Okay, so these are the levels on the 15-minute time frame I'm looking at. See, all I'm doing is tracing pivot points. See, boom, 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 and in theory you could, you know, map this as well because this was a pivot point. And then, you know, you could map this as well if you wanted to. Boom, boom, right here. And you see, down. And all I'm doing is mapping, see? Boom. And then I use this. To me, this was, I don't know, to me, this was a key level right here. So, and then right here, and then right there. That's it. And then if you wanted to, you can go back on the 5-minute time frame, see if you see any levels on the 5-minute that you don't see on the 15-minute. That you may want to map, but that 15-minute is very strong. I would really work on AMD. I would really focus more on the 15-minute than anything else. Like in theory, this is on the 5-minute. You see on the 15-minute, you don't see this pullback, but on the 5-minute, you do. And you may want to map it just to see how it reacts to these levels. So what I'd be looking to see is wait for the pullback to dip buy off of, you know. And then look on the 5-minute, you don't. I mean, on 15-minute, you don't see this, but on the 5-minute, you do. This is a level that I definitely would map because this is where it pivoted right off here and it took off. So these are the levels that I would be looking at on AMD. All right, and you know that way to potentially make a trade. You know, usually what happens is the key breakout level is the area where it kind of holds. So tomorrow I'd probably be looking at this level right here, this 29.30 level. See if it pulls back there and then just takes off again. You know, maybe it fades or it gets back down here to this 28.86 level and then just takes off again. We'll see. You know, we'll see. But AMD is something that you should put on your watch list. So that's what I do, guys. That's all I do. You know, and that's how I find the trades. So again, you know, watch my videos. You know, I have these are my videos. So I have my channel watchotrade on YouTube. I have a whole bunch of videos. If you really want to see where I'm at in terms of my trading, like you want to like really focus, watch the videos from March on. So March, April, May, and August. Watch those videos, and I'll guarantee you'll have your edge watching those videos. You know, if you know nothing about trading, watch this. This is 12 videos playlist. You know, of like, you know, all the, you know, sort of kind of getting a sense of how to trade, and you know, these are like good videos so that you can learn like different strategies and stuff like that. But from March on of this year, those are my opinion, those are my best videos. But if you know nothing about trading, this is a good video to watch. You know, I did this a long time ago. One day I'll make another one. You know, and if I start a room, you know, if I ever do something like that, and it won't be really a room, it'll be more like an academy, because I don't even think I can you know, watch the market every day unless I, you know, left my job at some point. You know, then it'd be different. But if not, it would be more like an academy. Like you would go to class and we would have classroom sessions at night and review stocks, and I teach you guys stuff. And then, you know, if I can pre-market, I walk you through, okay, look at this, you should be looking at that sort of thing. So I'm thinking about it. More and more people seem to be interested. So just, you know, let me know what you think. All right, folks. So that's it, guys. Map your support and resistance lines. If you see stocks gapping pre-market, definitely want to map your top and bottoms and where the pivot points change. Remember, start on the 15-minute time frame, then look at the 5-minute time frame, and then just watch the stock. You gotta, you know, watch it like a sniper. And when you see, let the trade come to you. If the trades are nowhere near any of your levels, any of those support and resistance levels, just stay away. Okay, don't risk, because then you're just gambling. All right. So anyway, hope everything.